Good morning, good morning, good morning. Welcome to today's Morning Blast with myself and Mr. Michael Brown. It is Monday, the 14th of what month is it? April. Jesus. It feels like we should be halfway through the year by now. And what a year this weekend has been. Thankfully, myself and Michael hopefully have stayed on top of the news. And we can give you all the insights. Obviously, it's been a very, very headline heavy weekend. And as usual, anything we discuss today is guaranteed for as long as we are talking. As soon as the show's over, anything could happen. And sometimes even during the show. But before we crack on, I'll get the legals out of the way. So, as usual, nothing discussed on this Spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ or indeed myself, Mr. Ryan Paisley, and I'm trying to think of a superlative for him today, the ranty Michael Brown.
Oh dear. Very good morning, Ryan. Good morning, everyone.
Can I just start off before we crack on? Just a shout out to a number of people that last week. Obviously, it was a very very busy week, and we had myself and Michael had some very very nice feedback from a lot of you. Yes, last week saying how much you enjoy the show and how much value it adds and puts a smile on your face. So we both thank you very much for that, and hopefully we can carry on doing so.
Indeed, yes. And if you didn't send us any kind remarks, then
It's been
get
noted.
writing, basically.
Yeah, yeah, we've noted. We've noted.
Oh dear. Another week of fun and merriment awaits, I'm sure.
Yeah, yeah. I see Zach's tuned in from the slopes, which is nice.
Is he still
I-
there? Bloody hell.
yeah, he's there until May. Blake Judith Chalmers. I got to be honest. I'm a little bit nervous about reading out the overnight news roundup section because I can't even understand what happened over the weekend.
Oh dearie me! Right, well, let me try and have a stab at things
Let's crack
first, and
on.
give
Let's
you,
crack on.
excuse me, give you 10 minutes to work out what's going on. In terms of last week and the weekend, then, well, it was a relatively positive end to the week in terms of risk appetite, at least, with the S&P and Nasdaq both notching daily gains of as near as makes no difference 2% on Friday, which in turn took the S&P to a gain of about 6% on the week, which actually marked excuse me, which
That's okay.
actually marked the best week for the benchmark index since all the way back in November of 2023. Although, of course, conditions were very, very choppy indeed throughout the week, and in fact, that might be something of an understatement. Once again, though, the moves that we saw on Friday, or the most interesting moves, I should say, were in the foreign exchange and fixed income arenas. Across the Treasury curve, we saw selling pressure persist on Friday, most notably at the long end of the curve, where 10-year yields rose by a further 5 basis points, ending the day at 4.5%, although we were up by as many as 15 basis points on an intraday basis, with 10-year yields trading as high as 4.59% and the 30-year yield testing 5% once more before those moves paired back a little bit. One of the reasons why we saw those moves pair back were some, I guess, sketchily reported comments from 2025 Fed voter Susan Collins. The FT ran a headline at about 7 o'clock on Friday night saying from Collins that the Fed are absolutely prepared to step in and stabilize markets should conditions become disorderly. What the FT left out of that headline were the words that she said right after that, which were, but markets are continuing to function well. So, very much a kind of reiteration of what you would expect the Fed to be saying. If conditions do get out of line, then we'll give you a helping
Do you know?
hand. But right now, they're not out of line, so we're not
So
going to.
just on this, and this is why it's very, very important to always, if you can, read the article. Hence why PIQ. Not, I'll tell you what, not for the benefit of my health, but we actually pay for the distribution license of Reuters. So if you see a headline, always do yourself a favor, click on the link, go to the
Mm.
site, read the article, because we pay for that, so you can read it. Otherwise, someone else has got to pay for it. I
No,
wish I
you're
didn't have to
absolutely
pay
right.
for it. But one thing that this is happening more and more, especially when these headlines, it's very easy for a scary headline to be released, especially when markets are volatile anyway, markets are a bit on their toes. For
Mm.
instance, we had this on, like you said, on Friday, on, when was it? Yesterday, we had a headline saying, I can't remember who it was, potentially Lutnick, said, Trump's got no plans to speak to China. Now, immediately you think, fuck, that means that he's got no, he doesn't care about negotiating or anything like that. That's
Mm.
incredibly bearish. Now, we posted it, and thankfully we posted the full story. And we even did like a little summary and key points on the original tweet, which I had some good feedback about trialing that over the weekend. So we're going to try and roll that out this week. But anyway, but if you read the full story, it's Trump has no plans to speak to President Xi in the calendar, but we are looking forward to, like, basically, we are looking forward to a meeting in the future. It's like, oh, for fuck's sake. It's incredibly, and we're not saying this for our health, right? We wish that headlines carried all the information because it means we've all got to read less.
But they
Unfortunately,
don't,
they don't. So
indeed.
anything that looks a bit scary, or if you've got the opportunity to read the full article or even the first paragraph, do yourselves a favor. Don't just jump on a headline. Please, please, please. But anyway, that's my little rant for the day.
No, it's a very valid rant. I've got another example of that coming up momentarily, which I'll get
Oh, good.
onto shortly. But before we do, just worth bearing in mind that while we saw treasuries selling off across the curve, we saw the dollar slumping once again against pretty much all of its major peers, with the dollar index down by over 1% on Friday, trading below the 100 mark to about 3-year lows, and we stay below that 100 mark this morning. Pretty much everything else in the G10 space gaining ground. The euro notching 3-year highs around the 114 mark. Cable back north of 131, and we also saw dollar Swiss trade to its lowest level since the infamous depegging incident all the way back in 2015.
Love a pegging incident.
Oh, Christ. Again, this just points to what was at the back end of last week, and arguably continuing into the start of this week as well, a relatively broad sell US assets theme. People coming out of treasuries, people coming out of the dollar, and it will be very, very interesting to see whether that dislocation continues as we move into the new trading week. The big beneficiary of that, of course, has been gold, which continues to shine and continues to
Yeah,
glimmer, with the yellow
yeah.
metal gaining a further 2% on Friday, notching new record highs north of $3,200 an ounce. Of course, in terms of fundamental drivers, the market's main focus remains on trade and tariff developments. Literally, as soon as we hung up from the morning blast on Friday morning, China announced that they were increasing tariffs on imports of US goods to 125%, effective from the 12th of April, which was Saturday morning. Importantly, though, China also noted within the statement that accompanied this tariff increase that they will ignore further tariff increases if the US continues to impose them, basically saying that it no longer makes economic sense. Essentially, the argument here is that with tariffs on both sides well above 100% at this moment in time, there is effectively a trade embargo between the two nations. Only those products which have humongous margins, or those products which literally cannot be sourced from anywhere else, are going to be exchanged between the two nations at this moment in time. Pretty much everything else, trade is dead. And actually, I think it's slightly ironic that a communist country is the one that recognizes that there is absolutely no way that a market exists there anymore, while Trump just continues to push ahead with his nonsense, effectively. Nonetheless, worth just bearing in mind, and of course, it is interesting that China's saying they're going to basically ignore whatever the US does next. We also had reports on Friday afternoon, and again, classic case of read beyond the headlines. CNN reporting that the US told China to request a phone call between President Xi and
Oh,
President
yeah.
Trump. You read that headline, you go, whoa,
Yeah.
okay, we're moving, we're going to get a deal done, this is great, buy everything. Actually, that's not the case. What happened was there were private talks between the two sides before China imposed the 125% tariff that I just mentioned. And the US, in those private talks, basically said to China, we quite like you not to do this and would rather you arranged a phone call between the two leaders instead. Of course, China turned around and went, absolutely not. We're not going to be doing that just yet. We're not going to arrange a leader level phone call, and no talks are on the table at this moment in time. So, again, not necessarily misreporting, but just a headline being slightly
Yeah.
economical with the full truth. And then another example of that on
Yeah.
Saturday, we had Bloomberg reporting that Apple, Nvidia, and others had scored a reprieve from various tariffs with an exemption. Now, this stemmed from something that the CBP, Customs and Border Protection in the United States, dropped a press release very, very late on Friday. I think it was actually early Saturday morning, UK time, basically noting that smartphones, computers, semiconductors, various other electronics were actually exempt or had been exempted from the reciprocal tariffs that have been imposed not just on China, but also on a whole host of other nations, with that exemption backdated to April the 5th. Now, again, this got lots of people very, very excited over the weekend, but actually, if you dug into the article, and President Trump actually confirmed this with a Truth Social post yesterday evening, what's actually happening here is these products are effectively being moved from one type of tariff to another. So where the products currently sit is under the reciprocal tariff regime. They are instead going to be moved and sit under the national security tariff regime, which is where tariffs on things like steel and aluminium and automobiles are currently being dealt with. So again, lots of people getting very, very excited. There's really nothing to get excited about here. The only difference is effectively the label that is going to be slapped on these
Just
types of tariffs. Of course, just one last thing,
sorry,
sorry.
go on.
We do await further detail on the semiconductor tariffs, and that could come as
Yeah.
early as today or at least some point this week.
Just two things to add on that. One, I hope everyone's taking notes because there's a quiz at the end. Um, and also, just why, if anyone's wondering why is it being labelled under national security, it basically means that if they do it under national security pretenses, Trump has a lot less hurdles to clear in order to force this through, and also so it doesn't get wound back. Um,
Yes.
he can kind of go a different route via kind of the policymakers and Congress and all that stuff. So if anyone's wondering why, it's because of that. But we do know that Apple has been lobbying the Trump administration hard, so potentially this gives Trump a little bit of, you know, free will over exactly how he's going to force these things through. But cool. Is that you done, mate? Or
No,
by
no, 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 no. I've got
go on,
plenty left to get through
go on,
here,
carry
Ryan.
on. Sorry, I
The
apologise.
final tariff-ish point that I wanted to make this morning, just before moving on to a few other bits and bobs, is we did have some trade data out of China this morning.
Oh yeah,
Exports from China rose by 12.4% on an annual basis in March, well above the 3% decline that we saw in February. But I think basically all of that is tariff front running.
yeah.
Effectively, people trying to get product out of China as quickly as they can and in as much volume as they can before those tariffs take effect. And that is why we see that data skewed higher.
Yeah.
Similarly, when you get to the April or even the May data, you're going to see a massive drop in exports. Don't be surprised when that happens. Away from the issue of trade and tariffs, a few other bits and bobs to get through this morning. In terms of data on Friday, we did have the latest PPI figures out of the United States. PPI rose 2.7% on an annual basis in March, down from the 3.2% that we saw in February. Again, another data point that points to a bit of a Goldilocks scenario in the US economy in the month of March. Solid jobs creation with disinflation continuing nicely. Of course, it was a real shame that someone then decided to take a complete wrecking ball to that, and it means that the data is basically useless. We also have the latest consumer sentiment data, excuse me, out of the University of Michigan. Consumer sentiment fell to 50.8 in April, down from the prior 57. Interestingly, even when you break that down by political affiliation, yes, sentiment among Democrats and independent voters tanked is about the only way to describe it. But sentiment among Republican voters, that fell to 81.9 from a prior 87.4. So although still at a relatively high level, Trump is now even losing his own voters. Meanwhile, the 1 year ahead inflation expectations metric, I think they were surveying people in Venezuela for this one because the metric rose to 6.7% from a
We
prior 5%, and that is the highest level since 1981. away from all of that nonsense, a couple of things just to bear in mind here in Europe. Across the channel, firstly, we heard from ECB President Lagarde on Friday, again saying that the ECB are monitoring financial market developments. Markets are working in an orderly fashion, but the ECB is ready to use its instruments if it is required. Commentary that you would really expect from a central banker in an environment like this. We also had confirmation on Friday that EU nations are going to go ahead with this 10% deviation from the natural gas storage goal. This had been rumoured for quite some time now. Effectively, this may, because the price of natural gas has gone through the roof, or it had at least when they were discussing this, they are going to top up their storage much more slowly. I know LNG is becoming a bit of a talking point as a kind of easy way to reduce trade
And
imbalances.
who's
I
been saying
suppose,
that for? Who's been mentioning that for about at least 2 weeks?
well, indeed, if people were listening, they would know that already, wouldn't they?
Yeah,
Um,
exactly.
but that is obviously something just to keep on the radar, or at least in the back of your mind. And last but by no means least, here in the UK, we talk about the struggling London market quite a lot. We had reports via Reuters sources on Friday that Shein, the fast fashion retailer out of China, they have apparently gained approval from the UK government to list and host their IPO here in London. They are, of course, still awaiting approval from China to go ahead with that offering, but nonetheless, something to bear in mind. I mean, London very much second choice to New York for this listing, but given the sort of broader geopolitical atmosphere, I think it's going to be interesting to see how that one shakes out. And for the
So,
minute, that is all from me.
so just on that, do you think that you we do kind of talk shit about the London Stock Exchange Group? No offense if you're listening. I'll take your money if you want to advertise on B&Q. But yeah, because of the lack of listings, do you think, obviously, what we've seen here with Sheen, that we could see more companies that were potentially looking to IPO in America now looking to IPO in Europe and specifically in the UK? Or do you think this is just kind of a one-off because Sheen were already talking about it?
Potentially, I'd be tempted to say this is more of a one-off because, as you say, this is something they've
Yeah.
been sort of mulling over for quite some period of time. The other thing is, though, clearly beggars can't be choosers, but
No,
the London market effectively becoming the market you list on when you can't go anywhere else. I wouldn't say that's a particularly wonderful omen, but
I mean, I'll
as I say,
take
we'll
it,
take whatever
but
we can get at this point, right?
yeah, no, exactly. No, I'm completely in agreement with you. I don't think it's like the sign of things to come. I think it's just because there's probably a lot of paperwork already done for London, so they're like, fuck it, we might as well use that.
Exactly.
Jokes aside, but these things are definitely part of
Oh,
the
100%.
decision process. Cool. Well, thank you for that, Michael. So I'll just before we go back to you, I'll just jump on and with some choice headlines from Zach's always awesome overnight news roundup. If you don't already follow us on Substack and subscribe to that and get it directly into your inboxes, please do so. It's obviously always on our pinned tweet as well. Um, keeping up with these headlines is a phenomenal task. So you might as well leverage on the likes of us and Zach to do it for you. Pardon me. So cracking on, obviously tariff policy headlines. Again, these things are going to be valid until the next hour or so. Some of these are probably already outdated, but as Michael alluded to just now, there's been a lot of backwards and forwards and a lot of kind of comments are kind of overriding previous ones that were made by Trump or some of his delegation. But the crux of it is that Trump said on Truth Social that no country is getting quote off the hook, especially not China, and that tariff flexibility will apply to select companies only. Trump said he would announce a tariff rate on imported semiconductors in the coming weeks. We've heard, as Michael alluded to as well, potentially this week we'll probably get more headlines. So headline risk is a factor all the time, every time. US Commerce Secretary Lutnick confirmed new tariffs are coming for smartphones, computers, and semiconductors within 2 months. From what I've seen, probably a lot sooner than that. Lutnick privately told CEOs that consumer electronics would be included in the coming semiconductor action. USTR Greer, stated electronics exemptions from reciprocal tariffs would still be targeted under a different category. Again, that's kind of folding into the national
Just,
security, which Michael alluded to.
just on that,
China
sorry,
called. Yeah, go on.
One thing
Go, go,
to
go.
just bear in mind is Jamison Greer, the USTR who you just mentioned there. I think he might find himself in a bit of hot water with people in Congress in relatively short order because
Go on.
Wednesday afternoon, was it Wednesday afternoon when Trump did that U turn on the reciprocal tariffs, the 90-day pause? I think it was Wednesday.
Oh, yeah, yeah, yeah.
Jamison Greer was
Oh,
actually
I know what you're
sat
saying.
in Congress testifying about the reciprocal tariffs at that very moment in time, then claimed to have absolutely no clue that Trump was literally tearing up his
Yeah,
policies as he was speaking to these lawmakers, which either on the first hand, it just proves that there is absolutely no coordination going on here whatsoever, which is not great. On the other hand, it's the fact that the USTR did know what was going on and he's lied to a load of lawmakers,
yeah,
which equally isn't particularly great. So, just something else to, as if there wasn't enough to bear in mind already,
yeah.
I think there's going to be a few people on both sides of the political aisle, really, who are not exactly his best friend at this moment in
No,
time.
exactly that. Also, let's not forget that there's some quite considerable evidence to say that some insider, so quite significant insider trading's been going on,
Mm.
especially when you got the likes of Trump basically pointing to his billionaire friends and say, "Oh, he made 400 million
Yeah.
today today's news." You're like, "Hang on a second, yeah, I wouldn't be surprised if some action comes from this." But anyway, China did call the US tariff exemptions a small step and urged Washington to remove all levies, but obviously those exemptions aren't really exemptions. So again, they're in a bit of a pickle again. Chinese President Xi warned that US protectionism will lead nowhere as he began a regional tour to strengthen trade ties. South Korea's acting president said Trump has ordered immediate tariff talks with South Korea, Japan, and India. The UK suspended import tariffs on 89 products and increased export loan facilities in response to the US levies. Thailand will hold tariff talks in Washington on April the 21st. India begins sector specific trade discussions with the US today, so expect plenty of headlines there, aiming for sector clarity by end of May. Again, don't be surprised if we start seeing energy be the hot topic on this one for very easy, because remember, it's not just about the tariffs, like for like tariffs, it's all Trump wants to get the deficits down. And grain purchases or ag purchases and energy are very, very low hanging fruit
Mm.
for these nations to kind of shrink that. So keep an eye on that. So one for the ag names and also anything regarding LNG, nat gas. Indonesia is offering to increase US imports and may allow state firms to invest in US oil, gas, and tech. Just some macro headlines now. Fund managers warn the US dollar's haven status is at risk from erratic policy and rising trade barriers. I believe it was the JP Morgan CIO, Chief Investment Officer, on Saturday said that the US is safe haven status is not as strong as it once was, which I think is an understatement, but yeah, one to keep an eye on. Canadian and Danish pension funds are reassessing private US investments until policy stabilizes. Citigroup downgraded US equities to neutral and upgraded Japan to overweight. JP Morgan says US treasuries may have bottomed, citing strong foreign demand and full position deleveraging. China's March exports, as Michael said earlier, surged 12.4% year on year, beating forecasts as firms race to beat the US tariffs. New Chinese bank loans rebounded sharply in March. China's Xi called for deeper, supply chain cooperation with Vietnam and broader tech collaboration. Bank of Japan Governor Ueda said US tariffs could pressure the global and Japanese economies. I think that's an understatement. The CFTC data showed leveraged funds are the most bullish on the yen they've ever been since January 2021. France needs to find 40 billion with a B in extra savings to hit its 2026 budget target. If you remember, we only just managed to hit the last two budget targets, and that was after quite some serious political stress in Paris. Spain has proposed a new European defence fund using Russia's frozen central bank assets. Singapore cut its economic forecast and eased monetary policy for the second time this year. Hong Kong may intervene to cap local dollar gains as the greenback falls. Some equity and sector headlines now. Apple executive reportedly lobbied the Trump administration to avoid tariffs on China made devices. TSMC, obviously this semiconductor name, will begin construction of its third Arizona fabricator in June, a year ahead of schedule. Trump reiterated that foreign companies should not control US steel, casting doubts on Nippon Steel's $14 billion bid, as me and Michael have said for what feels like 6 months, this is going to just drag and drag and drag. Binance met with US Treasury officials to discuss loosening oversight and potential collaboration with Trump's crypto ventures. So just on this one, I did tweet this over the weekend, and it's a good job that Cam's listening. Perhaps we'll talk about the crypto blast later. This is an absolute carve up. So CZ, who obviously once officially ran Binance, I don't even know what his official position is now, but he's obviously still in charge.
Well, I think felon
He
is an apt job title for him,
Well,
isn't it?
this is it. So he is a convicted felon. And also Binance have been very naughty with the lack of KYC and AML and stuff, and they're under significant oversight from the SEC and the Treasury. What BZ and Binance have said is if CZ, if CZ gets a pardon and the SEC stop looking at Binance, Binance will list a Trump group linked stablecoin, which I'm sorry, but however you cut that, that is not kosher. That is an absolute carve up. So if they get away with this, then that is truly the world has gone mad.
Agreed.
Anyway, so Sony has raised PlayStation 5 prices by 25% in the UK and Europe ahead of a likely US increases. SK Hynix is increasing its 2025 capex by 30% due to a surging demand for high bandwidth memory. The UK is moving towards full nationalisation of British Steel to keep its blast furnaces open. One thing to add on that, it's all good on paper saying, oh, yeah, we're going to keep it open. But it seems at the moment that they're struggling to find the coal needed to keep the blast furnaces firing. And if those go out, it's impossible to get them relit again. So that means British Steel plant's going to close anyway. So if you are hoarding some coal in the UK, you can pretty much name your price at the moment. So have a look in your garden shed. Ageas is acquiring UK insurer eSure for 1.3 billion, creating the UK's third largest personal lines insurer. Geopolitical headlines now. The Kremlin said contacts with Trump's team are going, quote, very well, but progress will take time. Russia's budget could fall 2.5% short in 2025 if crude stays at current prices. US and Ukrainian officials held tense talks on US access to Ukrainian minerals wealth. Obviously, this is an ongoing thing. Trump expects to decide on Iranian policy soon, following, quote, constructive talks in Oman. A second round of US Iran nuclear talks is set for Saturday in Rome. Trump plans to stockpile deep sea critical minerals to counter China. In commodities news, before I go, Goldman Sachs now sees gold at $3,700 an ounce by year end and $4,000 by mid 2026. And finally, UBS expects gold to reach $3,500 an ounce by December 2025. And that is it for me. As I said before, those headlines, if you are listening to this on the playback, they're probably all out of date. So good luck.
Good stuff. Thank you, Ryan. In terms of actually just that British Steel thing, I was reading in the paper on my way in this morning. Apparently, there are some accusations and signs that the Chinese were trying to sabotage what was going on
Yes.
there and
Yeah.
accelerate the shutdown of one of the blast furnaces before this nationalisation
Yes.
happened.
So
So,
just a bit of color on that. So yeah, so not only did they kind of basically, so for those that don't know, so the Chinese firm bought British Steel at the time. It was seen as a bit of a national security risk. It looks like they were pretty much
yeah,
spot on because China's this Chinese run company, which as we know would probably be state backed, not only did they run it poorly, but just before they decided to acknowledge that they were going to hand it over to, well, they were giving up, they decided to flog off all of the stuff needed to keep it running.
yeah,
And the way people are looking at it now, it looks like it was seriously a bit of, done on purpose, shall we say?
yes,
Um,
absolutely.
cool. Okay.
In terms of the week ahead, then, of course, it will be another week of headline watching, particularly on the tariff and trade front. And by extension, that means we're going to be glued to President Trump's Truth Social feed.
And PIQ.
And PIQ, of course. Although, do of course bear in mind that there are the potential for geopolitical developments as well. And of course, it is a holiday
Oh,
shortened
yeah.
week as well, with it being
Ooh.
Good Friday on Friday, funnily enough, and the start of the that rather fizzled out, didn't it? And the start of Easter. So do bear in mind, of course, not only is it only a 4-day trading week, but also as we move into the long weekend, we may see trading volumes thin out and liquidity dry up even more than it already has. In terms of just going day by day, we've already had the trade data out of China this morning. The rest of today's docket is relatively barren, to be completely honest with you. Although
Thank
we do
God.
get earnings before the market open from Goldman Sachs. So it'll be interesting to see how the squid has done. And speeches today come from the Fed's Harker and Waller. In terms of the remainder of the week, then a few bits and bobs to bear in mind. We do have a few notable releases from the UK. Tomorrow morning, we have the latest jobs data, although get your bucket of salt ready because the ONS can't ensure that data is accurate. Nevertheless, earnings growth expected around the 6% mark, with unemployment set to hold steady at 4.4%. And then on Wednesday, we have the latest UK inflation figures. Headline CPI, that's seen at 2.7%, down from a prior 2.8, with core and services CPI figures also set to marginally decline. In terms of other notable data releases, Wednesday is by far and away the busiest day. We get the first read on first quarter GDP out of China. Again, that bucket of salt you're using for the UK data, keep it around for the Chinese figures. The Chinese economy, nonetheless, expected to have grown by 5.2% on an annual basis in the first 3 months of the year, a slowdown from the 5.4% pace that we saw in Q4. And also on Wednesday, we get the latest US retail sales data. Sales seem rising 1.4% in March, rebounding from the 0.2% rise that we saw in the month of February. Although do bear in mind that given the plunge really that we've seen in consumer confidence and consumer sentiment, it'll be interesting to see whether that has been followed up by a subsequent tightening of belts from consumers more broadly. It's also a relatively busy week on the policy front this week. We have a decision due from the Bank of Canada on Wednesday. They are set to hold rates steady at 2.75%. We also have a decision due from the European Central Bank on Thursday, with the ECB set to deliver a 25 basis point cut, lowering the deposit rate to 2.25%. And also on the policy front, we are due to hear from Fed Chair Jay Powell. He will be making remarks on the economic outlook on Wednesday evening. Other than that, it is also a busy week of corporate earnings. We have Bank of America and Citi reporting before the open tomorrow. ASML, obviously a big name in the semiconductor space, they report before the open on Wednesday. Thursday, we hear from TSMC, and we also, after the close, hear from Netflix as well. And then, of course, Friday, most markets will be closed in observance of Good Friday, although there will be some very, very thin trade in Asia and the Middle East. And that, from me this morning, is your lot for the time being.
Absolutely wonderful. Thank you very much, my dear friend. Listeners, as always, if you are trading, keep it tight, keep your head on. Remember to factor in the fuckery and tune in to see or listen to me and Michael this time tomorrow. Have a great one. Goodbye.
Indeed. Bye for now.